When the holidays start to feel a bit repetitive, reach for a Sprite Winter Spiced Cranberry and put your twist on tradition. A bold cranberry and winter spice flavor fusion, Sprite Winter Spiced Cranberry is a refreshing way to shake things up this sipping season. And only for a limited time. Sprite. Obey your thirst.
Introducing Meta Ray-Ban Display, the world's most advanced AI glasses. With a full color display built into the lens of the glasses, it's there when you need it and gone when you don't. Send and receive messages, translate or caption live conversations, collaborate with Meta AI, and more. Be one of the first to try Meta Ray-Ban Display. Visit meta.com/Meta Ray-Ban Display to book a demo and find your pair.
Hello and welcome to Fintech Insider Insights by 11FS. I'm your host, Laura Watkins, and today we've got a very special episode to round off what has honestly been an amazing year of content. Here at 11FS, we rarely get the chance to hit pause and look back at everything that's happened in fintech over the past 12 months. And a lot has happened. Seriously, some of it brilliant, some of it bewildering, some of it, did that really just happen? We've talked to experts around the business and polled our community to help us shine a light on the stories that might have slipped under your radar. The fintech feel-good of story of the year, the buzzword of the year, yes, think of it as the 11FS Cambridge Dictionary entry, the partnership that blindsided us all, the fintech glow-up of the year, no, we're not just talking about a rebrand. And of course, we'll pause for that one jaw-dropping moment that made everyone go, WTF. There's quite a lot to get through, so to help me take a trip back into the archives, I'm joined by two absolute 11FS powerhouses from our Ventures and Pulse teams. Honestly, who better? So first up, David Barton-Grimley, Director of Strategy and Head of Product at 11FS Ventures. Welcome. You'll sadly be stepping down from your podcast hosting duties very soon, but before you go, please could we have your standout moment from 2025?
I mean, first off, Laura, I have never been described as a powerhouse before, so that's kind of amazing. But yeah, no, it's been a real privilege to be a part of the podcast and a part of 11FS over the last, I think it's like 3.5 years. So I'm very humbled by the skills and talent that exist in this company. It's kind of incredible. Standout moment from 2025. I've interviewed so many people. I think Izzy, our producer, told me I've done like something like 50 or something this year, something like that, podcast. But I think that the one that stands out for me the most is the interview I had with Stathis at Google Cloud. Really, I mean, Stathis just has an amazing way of deconstructing agentic AI, what it is, how it works, how it doesn't work, how to actually, build off it. So I'd highly encourage everyone to go and
Amazing, yeah. Go and find that episode in your podcast feed. But yeah, also Stathis is just a great guy. And the ability to break down something really complicated in an accessible way is such a great skill. Next up, we have Joe Colchester, Head of Product at 11FS Pulse. Welcome to the show. What's something you've worked on this year at 11FS that really made you pause and think, yeah, that was pretty great?
Thank you so much for having me back. I think one thing we're really proud of at Pulse delivering this year is the enhancements we've made to the brand page. So we've started pulling in loads of data from the App Store and the Play Store, and off the back of that, pulling our own sentiment analysis so we can find out how people are talking about apps, key themes and keywords derived from that. And what we're finding is that a lot of people are just hanging out on that page to dig deeper into what people are saying about their customer support, their UX, their account service, and this kind of thing. So that's been a hugely successful launch for Pulse and has made the platform a lot more sticky, which is great.
Amazing. Well, congrats on that. And yeah, obviously just giving people deeper insights is what Pulse is all about. So that is a huge addition to the platform. For me, I think my moment of the year is obviously self-indulgent, but cannot pass without mention, is episode 1000 of this very podcast.
Ah, yes.
Quite the milestone for our little B2B podcast in fintech. I think a B2B podcast in general to have lasted 1,000 episodes is an achievement, but adding on the extra industry niche and so on and so forth. It's just an amazing milestone. And also we just had a lot of fun recording that episode, if you remember. Yeah.
A few too many drinks.
We had Prosecco, we had cake. Prosecco went on the cake. Yep. It was good fun. So now that we've got our dream team of experts assembled, shall we crack open this yearbook and dive in? Our first category today is the feel-good fintech story of the year. So this is celebrating the initiative, breakthrough, or moment that has genuinely made the industry feel good, giving further proof that fintech's heart is as strong as its tech. This is the story that made the whole community collectively say, more of this, please. So before we dive into it, a few notable other mentions in this category go to the decision to teach financial education to children in UK schools that we were very excited about. And also, and slightly more adjacently, a drop in children swallowing coins reported by the NHS, which is equally a big win for fintech in its own way. As we go more digital, there's less chance of kids swallowing coins, I guess. But the main shout out for this category goes to Project Nemo, expands in the UK to boost disability inclusion in fintech. Talked about it a lot on this show, but as a reminder, the initiative is a grassroots, not-for-profit campaign created to push fintech firms to build products, services, and workplaces that are accessible to people with disabilities. They teamed up with HSBC Innovation Banking UK to help fintech firms assess and improve accessibility, offering training and direct feedback on product design. And in October 2025, Project Nemo was named overall winner of the inaugural Diamond Grand Prix Award at Money 2020 USA for its transformative approach to disability inclusion in fintech. The award comes at a time when the UK government is preparing to publish a broader financial inclusion strategy, potentially giving Project Nemo even more influence over future policy and industry standards. To tell us more about this brilliant initiative, we have a voice note from Project Nemo. Let's hear from Joanne Dewar now.
My highlight for 2025 has to be to have seen the wonderful volunteer team of Project Nemo be recognised as European FinTech Team of the Year at the European FinTech Awards, and then most recently in Vegas winning the Diamond Grand Prix for driving transformational change. Project Nemo has 3 key plans for 2026. Firstly, launching a resource hub, which includes all the content that we've created over the past year, but also a curation of other content that's available and highlighting those that are able to help our industry move forwards on their disability inclusion and accessibility journeys. We're going to be holding our industry's feet to the fire to continue to hold the space to progress accessibility and disability inclusion as an industry. And then watch this space for what may materialise from our Learning Disabilities Safe Spending project.
Amazing. A lot of foreshadowing of things to come from Joanne there, which is really, really great. Jo, what's your sort of take on everything that Project Nemo have achieved, and sort of why is accessible design really difficult to achieve, and why Project Nemo needs to exist?
Yeah. Well, I think Project Nemo has done such a good job at highlighting the scale of the problem and really making that much kind of better known because it's been there, but it's not been widely talked about enough. And also Jo and those volunteers around are building up momentum around it. So it's now getting to a stage where people are thinking, I don't want to be left out of this, where previously it was slightly more fringe. And a bit more of a box-ticking exercise when it actually came to transforming that change and delivering that change, because I think there are certain things that have always been there, like kind of WCAG checklist and this kind of thing. But what Jo and her team are doing are kind of through lived experiences, actually coming up with the meaningful things that you can and should deliver to make sure that some of the problem is addressed.
Yeah, absolutely. And some of their evidence suggests that, accessibility does not mean just catering for a minority. Often it makes the experience better for the majority as well, right?
Absolutely, yeah. I think we found that a lot of the developments in user experience and tech have often come from helping those in need first, and then actually, as you say, translates into the mass market. Like I think predictive text, for example, initially came from helping people with motor issues, because they could just do it quicker.
I didn't know that either, but that's amazing. I use predictive text all the time.
Yeah. So actually, we really look forward to things like calm mode and all these things coming our way. We haven't seen that much innovation in, say, card management in ages. Perhaps this could be the vehicle that delivers it, not just for those with disabilities, but the wider market as well.
Amazing, yeah. And David, bringing you in, sort of, Jo was talking about that kind of FOMO piece in terms of like companies sort of if I have to do this, I will. But now they're sort of afraid of being left out of the experience. Do you think that that's kind of a differentiator, perhaps?
Yeah, I mean, it should be. And, as you've said, like the FS industry overall has really, really struggled with this. And it's sort of a little bit puzzling. Why? Because if you just think about it, there's all sorts of research out there which shows that, a more diverse workforce, a more diverse board, a more diverse exco just results in much better financial performance for the company. So if you want to just be really brutally incentivist about this, then the incentives should really align. But for whatever reason, it's been very, very hard to sort of break through the board. And I think there's also other things in there as well, like, just training and upskilling people from all sorts of backgrounds and the whole neurodiversity aspect as well is also very, very important. So I do hope that projects like Project Nemo are the sort of flag that people can follow. And if it is a question of people following that flag, then that's okay. That's fine. Whatever enhances the situation.
Yeah, definitely. And they've done such an amazing job in the last, I'm not quite sure how old Project Nemo is, at least a year and a half, maybe more. So much so that it's kind of beginning to influence the kind of financial inclusion strategy at kind of government level. Like that is an amazing cut through, right?
Yeah, and that financial inclusion strategy is actually incredibly interesting because it touches a little bit on what you were saying, Joe, in that some of the features that you develop for, say a segment of society who needs accessibility can actually move to everybody else. And I think that is what the UK government is also trying to do, right? So fair access to credit, you're making sure that people are not taken advantage of. Well, okay, that's great for vulnerable populations, but that's also great for everybody. And I think that's what the UK government is trying to do with the inclusion strategy.
Well, let's see what happens on that. Kind of based on the sort of initiatives that Joe mentioned are coming up. What would you like to see happen in this space next year, maybe from a product perspective?
Well, I think it needs to stop being thought accessibility as an afterthought and actually be delivered from the ground up. And I think we understand why that's happening currently because the happy path is the easiest to design. It's an intuitive way of doing it. That often no one in the team could have some of these disabilities. So you assume that everyone can kind of get along fine. But I think what Project Nemo will do, and hopefully we'll start seeing some transformation here, is either through the resource hub or some of the actual solutions that they'll deliver, that thinking will be done on their behalf and people will know where to look as opposed to just a checklist. The checklist can be helpful, but there's a lot more than that. So I think, addressing some of those issues and thinking about it to begin with rather than, oh, damn, we need to think about accessibility.
Yeah, absolutely. I mean, I guess Project Nemo's ultimate aim, and I don't wish to speak for Joanne because I don't know this for certain, is not to exist, right? Because they've done their job if everybody is taking this, from the ground up when it comes to building for accessibility. Like, as you say, it's having it as part of the product roadmap in the first place rather than as an add-on. Fantastic. Okay, well, that was a nice start. Feel good. I'm going to move us on now to our next category, which is buzzword of the year. I'm sure you can imagine what the outcome is here, but this is honouring the term that dominated pitch decks, panels, product meetings, and every other corner of the fintech universe. It's the phrase that launched 1,000 LinkedIn posts because no fintech cycle is complete without a shiny new buzzword. Honourable mentions for this category were the actual Collins Dictionary word of the year, which was vibe coding, and the one that everyone won't stop talking about, and don't worry, we will equally be talking about it soon as well, which was stablecoin. But here on Fintech Insider, our buzzword of the year was agentic AI. So agentic AI is no longer just a cool idea. Major banks and fintech firms are increasingly rolling out live systems. For example, Lloyds Banking Group has announced a plan to deploy an agentic AI financial assistant across 21 million of its customer accounts in early 2026. Use cases now cover a broad spectrum from onboarding and KYC, AML compliance, to fraud detection, loan processing, payments, and customer support. Agentic agents can scan documents, flag suspicious activity, speed up credit or loan approvals, and automate repetitive tasks, saving time and reducing error. Many banks have historically operated on slow legacy technology. Agentic AI is seen as the lever to accelerate modernization. David, coming to you. You even mentioned agentic AI as one of your standout moments for the year with the interview with Stathis. Tell us more about this. This is kind of moving from, I know we've called this our buzzword, but it is really moving from hype to real world deployment, right?
Yeah, gosh, there's so much here. I mean, how much time do we have?
6.5 minutes.
Okay, right, off we go. I think we need to draw distinctions between different types here. I mean, buzzwords are often there that everybody kind of rallies around and everybody moves towards, right? But I think the truth is that agentic AI decomposes into quite a few different things, right? So there's generative AI, and there are some aspects of generative AI that are agentic in nature, in the sense that, you know, you can ask it to go and do a thing, and it'll go and do that in cooperation with various other systems. And yes, as you're saying, you know, Lloyd's Banking Group, but also on the podcast that we had last week, we were talking about Mistral, which is another AI service working with HSBC. So you are seeing a lot of banks now start to take this seriously. But what they are doing, as you said in the intro, is they're looking at those back office functions which have predictable enough repetitive patterns that an AI system can quite reliably do something with. And on the customer side, what LBG are doing, you know, the financial assistant, that's all insights. So what we're seeing is LBG, Starling is another one. They launched, I think it's called Starling Intelligence, you know, where you can go in and you can ask it a question and query, you know, how much did I spend at Starbucks last year or whatever, and it'll do that. So they are exploring it, which is great. They're taking very, very slow, measured steps around how they deploy it. Because also, I think the other thing about agentic AI is it in order to get it right, it requires that culture change also within the business. It requires the other capabilities that banks have. You know, their data has to be, it's that classic one, like junk data in, junk data out. This is the thing actually that Stathis mentioned that I think was so important in the Spotlight video I mentioned, is that at the end of the day, generative AI is engineering, right? It is a capability, it is a component that sits in your stack. You cannot AI out of a problem yet, right? Not yet. I mean, the idea is that we get to AGI and ASI, but that's a rabbit hole. So it's all about engineering in the back end and identifying those use cases that are going to minimize risk and maximize the benefit to the business. So yes, it is interesting. Yeah.
Yeah, definitely. But also it's kind of in that hybrid, I guess, of it's still in the hype cycle. You know, working on this show, like our podcast inbox constantly deluged with press releases that have AI in there somewhere and increasingly like agentic AI. But yeah, as you say, like it's sort of baby steps at this point to sort of get it right, I guess, because it's such a big undertaking if you get it wrong, I suppose.
Yeah, there's caution on the use cases, but there's also caution on the, shall we say, modality, right? So Mistral is an example of maybe a slightly different approach to Gemini or OpenAI or anything like that. They are open source models that a bank can own, you know, grounded in their own data, and use their own compute power as they want. Well, this is very, very different to something like Gemini, for example, which is a cloud-hosted, you know, situation which has various different risks associated with it. So there's just an enormous amount that financial institutions need to think about. It's not just the use case. It's about the architecture and what happens to your data and the risk that you take off the back of it. So, but what is amazing is that pretty much everybody is now looking into this and trying to figure out how to make it work.
Definitely. Yeah. Hence it's a buzzword, right? Because everyone's kind of looking into it, and a lot of the press releases are like, literally that we're looking into it.
Yes.
And so we're always sort of waiting for those kind of real use cases to be spat out sort of slowly, as you said. Joe, bringing you in, like, what does that kind of mean from the customer experience? Like David's talked about how that's going to shape the sort of back end, the sort of, you know, the grunt work, if you like. How much should a customer be aware of this?
I think that it's good that people are being cautious in delivering these kind of features so far, because we know how much AIs can hallucinate and go wild, and so I think I think at this point there still needs, anything to do with making payments, for example, I think it still needs to be partially agentic. I think it needs to be signed off because the stakes are too high and the error rate is too high on things that we're seeing and where we are right now with AI. So I think caution should be taken on both the build and on the customer side. I would say that a lot of the most experimental stuff we've actually seen individuals do. They might have even vibe coded it, if you want to combine two, where people have built up their own models that will buy stocks on their behalf based on some criteria that they've built out, and there's been some success stories there. Obviously, institutions can't do that to the same extent yet because of the associated risks. So I think, probably the biggest movers and shakers will actually be people taking on personal risk rather than institutions. But for the time being, I think we're probably quite a way from seeing end-to-end agentic AI in that sense.
I just want to build on that point because that's also come up in the podcast a few times. And there is a specific stat. There is a overwhelming amount of people who are using ChatGPT for their personal finances. It's a double-digit percentage. You've got people literally uploading transactions and saying, what stock should I be investing in? And you're right. I think that it's almost as if the individuals people are leading the market, and financial institutions will have to figure out how to get there in a kind of a regulated way.
Yeah, which is interesting because it's like, how do you sort of comes up of like, how do you communicate like that a brand is using agentic AI to their customers, and like to your point, it's almost going to be an expectation that they are using it. The customer's already ahead of them. So as you say, it's just about aligning the regulation and the practicalities of it to make sure it actually works in the back end without having a hallucination and creating a huge amount of risk. But I don't think we could have chosen anything else as our buzzword for the year. And I really enjoy how excited you are by the whole wide world of agentic AI. And on that note, we're going to take a quick pause, back very shortly.
Does it ever feel like you're a marketing professional just speaking into the void? But with LinkedIn ads, you can know you're reaching the right decision makers, a network of 130 million of them, in fact. You can even target buyers by job title, industry, company, seniority, skills, and did I say job title? See how you can avoid the void and reach the right buyers with LinkedIn ads. Spend $250 on your first campaign and get a free $250 credit for the next one. Get started at linkedin.com/campaign. Terms and conditions apply.
This is Jason Momoa, and I'll be your finance professor today. Welcome to Banking Smarter 101 with Chime. Bam! First lesson, sign up for Chime and set up direct deposit. You'll be joining millions of members banking fee-free. Second lesson, get cash back on eligible purchases while building credit and a higher APY on your savings. That's how you bank smarter this season. Fa-la-la-la-la, class dismissed. Join Chime today.
Chime is a financial technology company, not a bank. Banking services and a secure Chime Visa credit card provided by the Bancorp Bank N.A. or Stride Bank N.A. Members FDIC. Optional services and products may have fees or charges. Details at chime.com/fees-info. With a qualifying direct deposit, earn 1.5% cash back on eligible secure Chime Visa credit card purchases. On-time payment history may have a positive impact on your credit score. Results may vary. APY means annual percentage yield. Learn about credit building and more at chime.com.
Welcome back to Fintech Insider Insights, where we're taking a look back at some of the key moments from fintech that got us talking this year. Let's get back into our next category, which is the partnership you didn't see coming. In this section, we're spotlighting the collaboration that made everyone do a double take. This is fintech's odd couple that actually made magic happen. The partnership plot twist nobody predicted, but everyone talked about. This definitely got the team chatting here at 11FS, and some notable mentions go to Monzo, move its investments over to Seckle, not FNZ, not one of the big globals like SS&C, but Seckle, a UK high-growth company. Also worth mentioning the FCA NVIDIA AI Sandbox partnership, which is equally a real innovation supercharger. But the one that really took us by surprise is that Klarna launched its USD stablecoin with Stripe. I did promise that we would talk about stablecoins, so here we go. The Swedish digital bank and payments provider unveiled Klarna USD, marking its entry into stablecoins and crypto-enabled payments. Built on Stripe's new payments blockchain, Klarna USD is issued via Stripe's bridge stablecoin infrastructure on the new Layer 1 blockchain Tempo, making Klarna the first bank to issue a token on Tempo. This was particularly surprising as Klarna CEO Sebastian Siemiatkowski has publicly criticized crypto as potentially risky and volatile, noting that careful regulation and oversight are essential, even as the company experiments with digital currency. So, a lot in there. But I think the last point is particularly notable, that they've kind of done a U-turn on their position on crypto, which maybe is a response to the kind of wider market changes. But David, Klarna, has had a huge year, including an IPO that was, it was happening and then it wasn't happening and it was happening again. Do you think this is related to that? The IPO sort of went okay, but it looks like they're equally trying to sort of diversify all the same.
Yeah, I mean, they want to become a bank, like a full service bank. And it's interesting because if you look at how all of the big players are viewing it, they're all coming at it from different angles, right? Yeah. So Klarna's angle is we started off as BNPL and then we became a one-stop shop for shopping. So let's just widen our moat and get people to consume via Klarna. And then the final part of that is a full service bank that also includes the merchant side, which is where stablecoin, I think, begins to come in. So maybe what we need to do also is like decompose a little bit what stablecoin actually means for Klarna. So as we were saying, like we've had stablecoin has come up all sorts of times on the podcast over the last year. But essentially Klarna is they have to settle money to the merchants who are using the Klarna button. So if you think about it, a customer pays with Klarna. At some point, that money has to make its way to the merchant, right? And so Klarna are managing that treasury. They have to slosh a lot of currency all around the world so that they can get that currency settled to the merchants in a timely manner. Now, Klarna, like a lot of other, businesses, will be using the current legacy rails to move USD around the world. So they'll be using SWIFT, and SWIFT takes time and it costs money. So the use of this stablecoin at the moment is for their treasury function. So it's, let's significantly reduce the time that it's going to take for us to settle money to our merchants as an internal function. But then maybe what they can then do with that at some point in the future is that start to offer those out to some of their merchants. So there's just stablecoin has all sorts of uses, both for the internal organization, but also for their end customers. And then there could also be a end user customer benefit for this as well. Imagine like Klarna is a global organization, they become a bank. All of a sudden, you as an individual are banking with Klarna. You might want to move money around the world. Well, hey, here's Klarna USD. It just gives them so many different possible avenues and use cases that they can go into. So I think it's very interesting and very cool. At the same time, I would say that a little bit like the Lloyd's example with Agentic, this is a bit of a press release that is like, well, we're experimenting with it for an internal function, but we're doing stablecoin, everybody. We're doing stablecoin. So I think it's a very positive and very interesting thing. However, I think a lot of other businesses are also looking at stablecoin for very similar kind of treasury functions.
So do you think almost they will have to do this, else they might get left behind? They're kind of staking their claim early doors.
Yeah. I mean, it's good PR, it's good press, and it will help the fundamentals of the business in the long term. I don't know what the sort of like global nature of the business looks like, but I imagine they probably have billions of USD that they have to just shift between different markets, and that will significantly reduce the time. So stablecoin can settle in under a day. The important thing to mention about stablecoin as well is that's sort of come up time and time again on the podcast is that the price is probably not cheaper, but the time is so much lower, and because the time is lower, your exposure to currency volatility is therefore also a lot lower. So it's more profitable in the end. On top of, actually, one other thing I should say as well is that you can also make yield on the basis of it as well. So you can earn yield by having stablecoins. So yes, bit of a download from the last year of talking about stablecoin, which has come up a lot.
Well, we've unpacked that a lot. And equally, Klarna does many, many other things. They've moved so far from like the original kind of buy now, pay later proposition that they had. Joe, what was your kind of take on this one, kind of building on that, Klarna being that huge, like trusted brand, equally so is Stripe kind of coming together in this partnership? What was your take?
I think this does actually look like a good use case. And there probably are limitations to it that David called out. But I think this actually is a more exciting one. And I think we can actually see some utility in action and maybe money saved in transfers and made in yield, and also a quicker transfers as well. So I think that is quite exciting to see. That said, I just kind of echo the amount of hype in the industry more broadly. And you can't scroll for a second down LinkedIn without seeing another announcement on stablecoins or another announcement about why people don't really get it or the real value. I think it's time that real value was passed on to the consumer.
So true.
And you don't actually need to describe it all about what's going on in the plumbing. Just tell them why they're getting a better rate than someone else, or tell them slightly about the yield they're getting. You don't even have to dig into it.
Yeah.
I think that remains to be seen. And I think that's when people should start shouting about it.
So sort of like the open banking argument all
Yes,
over again.
exactly.
Like if it works, you don't need to tell people what the back end of it looks like.
Yeah.
You just need to show them how it works and how it makes things better for them.
Yeah.
And then it disappears as a term. Even going back to the point about Project Nemo, I think there's been a theme in this podcast. Is that it eventually just ends up by disappearing.
Yeah. Like if it works, you don't need to tell people about it.
Yeah, it just works in the background, and it becomes a treasury function and something important to people who work in these businesses, but not to an end.
Yeah, exactly. Yeah. So I think kind of hide the crypto and expose the utility.
Yeah.
It would be a good way to approach it, I think.
Do you think there's a lot of customers don't know and or care about stablecoins already?
Yeah, no, I don't think they need to. I think they just need to worry about whether the product's delivering the value that they want, and how it will be a competitor. They don't need to know about the technology behind it, I don't think.
Yeah, if you're a merchant selling and using Klarna, you just want to know that you're going to get paid, right?
Yeah.
Like how they do it.
There probably are some exceptions, maybe for people in developing countries for whom are very conscious or aware of stablecoin because of it's probably been sold to them as something that is cheaper, faster, and better,
and also that volatility point as well.
Yeah,
combating a lot of that.
Yeah. However, I think the same point that you're making still remains in the long term.
I think for those that want reassurances around the kind of security as well, they should probably have that information available to them because there might be some inherent concerns there.
Yes.
But I think it's just less about PR stunts and headlines and more about look how much happy our customers are and look how much money they're saving.
That's such a great point. I think we will wrap this category on that point because it was so good. And we're going to move on to our next category, which is most impressive growth of the year. For the product or company that underwent the biggest glow up in fintech, think of it as the industry's dramatic growth montage, and here's who made an impact. So as always, we're going to start with some notable mentions. Firstly, for Chime, for their rise from the ashes to IPOing after earlier setbacks signaled renewed investor confidence. And finally, we haven't talked about them enough, surprisingly, on this show, Revolut's latest share sale that valued them at a whopping $75 billion. However, eclipsing even all of that, the one to us that stands out the most is Nubank. So this year, Nubank enhanced its app experience, adding simplified loan and savings features, making banking faster, easier, and more user-friendly. In Q3 2025, Nubank reported that its global customer base had grown to 127 million, adding more than 4 million customers in that quarter alone, reflecting strong demand and continued growth momentum. Platform activity grew, reflecting strong adoption, customer loyalty, and equally this year, regional expansion accelerated as they pushed into Mexico and Colombia, evolving from a national fintech into a multi-country banking platform. So Nubank are just so impressive, right? Those numbers alone, like 4 million customers added in just one quarter, like, UK fintechs could never, right? So what's your take on this? Obviously, I'm sure we've got Nubank journeys in Pulse. Like, how popular are they? Does everybody want to be Nubank?
We've been seeing their journeys and their UX scores increasing quite steadily. So they've been getting better since 2019. And the broad range of features is very impressive, and how well they're delivered. They're not all 5-star journeys on Pulse, but a lot of them are 4 and above, or high 3s. So they deliver a lot, and they deliver a lot well. And given how much kind of opportunity there are in those regions and how the competitors are fewer, there's a lot to mop up there with some great features. So I think it's a good example of delivering features well and going beyond the basics and seeing how far that can go.
Yeah, definitely. And at scale and at pace and all of that. If we're sort of talking about the, David's kind of banking battlefield, if we're looking at who's got the most customers and equally who's doing the most in the digital space, they are, kind of starting to really lead the pack and kind of break the mold into, how you can have both, I guess, in this space. David, what do you think about this? Like, what can everyone else learn from Nubank, do you think, particularly in terms of how they've not only had that enormous success in their home market, but how they've taken it out into others, Colombia and Mexico in particular?
Yeah, and being successful doing it. I mean, these countries are not like, maybe they might be similar in some ways, but they are so fundamentally different. They all have their own regulators, they all have their own, customer behaviors, even language variances and everything like this. So I think what is amazing about Nubank is they launched with a very, very simple disruptive premise, which was a fee-free credit card in a market at the time that just didn't have that, right? So you've got something extremely different. And from what I can see, they've followed that exact same playbook by looking at these countries and identifying the product, and in this case, it's the fee-free product, that is going to attract them the biggest possible market share in the lowest possible time, right? So what is in demand that we can supply, rather than saying, hey, we're this amazing full service bank, let's just try and replicate this sort of amazing full service bank in this other country. And I think this is something that we talk about a lot at 11FS, which is creating a wedge, a very simple, clear wedge in a market, and then using that wedge to then grow your service offerings rather than just trying to sort of bang everything at the same time. And it seems that in the markets they've worked on, that they've done an incredibly good job at that.
Yeah, absolutely. And Joe, in terms of that kind of minimal beachhead, very like app-centric model, how does that sort of compare with what else is being offered to consumers, where there's sort of high smartphone penetration, lower sort of higher percentage of and underbanked? Like, is that the secret sauce?
Yeah, I think it is. I think delivering essential features in a very simple, UX-friendly way, and kind of rolling them out quickly and meeting the customer needs, and assuming that a lot of the users will have never used an app like this. That's why actually a lot of the designs that we see from Nubank are actually very different to the user journeys that we see elsewhere on Pulse. They take a lot of the best kind of design systems and practices, but they very much got their own very, very simple and effective way of delivering features and keeping things simple.
Oh, that's really interesting. So they're almost like teaching people at the same time who are maybe unfamiliar with
I think there is a bit of that, yeah.
Interesting. Yeah, because they're not trying to, I guess, beat Monzo or someone. Right. They're trying to be the first one in that industry. So people have got to learn those habits.
Yeah, and I think as a result, they've got very distinctive kind of visual style and branding as well off the back of that. So they're quite a standalone product in a way in Pulse.
Interesting. Where do you think they go from here? Like, I guess there's still room to grow. Obviously, there's the rest of South America or anywhere else. So there's obviously international expansion. Yeah. Is that what they do? Do you think, or do you think they take a shall we say, Klarna route and add more functionality to what they do?
Probably both.
It be both? Yeah.
Yeah. I think both. I mean, I think they probably, like Revolut, they see the world as their oyster, because they have a model that they have now tested in multiple markets that is very, very well refined. Do they choose to launch in, I don't know, countries in the Middle East, for example, or in Southeast Asia as Nubank, or do they try to do JVs? Or I don't know. I think it'd be really interesting to see that. But the model that they have is very similar to where Revolut are kind of now at, which is that you have a bank that is able to make money on an exceptionally low cost base. So I actually just clicked into that the article about their growth, and they have this claim in here that the average monthly cost to serve per active customer is below $1.
Wow.
Now I don't exactly know what the equivalent would be in a kind of a mainstream bank in the UK, but I'm pretty sure it's at least 10x of that amount, if not way higher. So their fundamentals are so damn good.
Yeah.
That, and I think Revolut probably has a similar number, and so will Monzo, etc. So they're probably all just looking at the world going, okay, we've got this. We can just scale exponentially.
Just playing a game of Risk. You can have this bit and we'll have this bit.
Maybe they divide the world.
Yeah.
Yeah, could do.
Can anyone catch them?
I think there's still a lot of businesses looking at this.
Mm-hmm.
But if you think about the world, there's probably few, if that makes sense. I mean, how many other businesses like Nubank can you name? There's maybe 10 type of businesses in various different regions that are doing incredibly well, maybe 15. I don't think there's more than that. I mean, of course, there's lots of consumer fintechs that exist out there, but I think the thing about Nubank and Revolut and some of these other ones is that they are banks. They are regulated banks. They can take deposits and they can lend off the back of that. And so they are different in some ways to other types of consumer fintechs out there. So yeah,
we could see, I think on a much smaller scale, but we saw Chase UK enter the UK and do very well there with a slimline feature set, but with lots of high value features in there, like good cash back and savings rates. I think they're going more to Germany now. We could see them do a similar thing, maybe at a smaller scale throughout Europe. So that could be one that enters the conversation because they're building on a great tech stack there. They're not held back by their legacy infrastructure.
Yeah, I agree. It's such an exciting time in consumer fintech.
Amazing. Well, I don't want to tip us into a prediction show because we do have one of those still to come. But we will obviously keep an eye on Nubank. I'm just so fascinated by everything they do on this show. So this will definitely not be the last time we talk about them. But I'm going to move us on to our final category, which is the WTF fintech moment. So spotlighting the moment that left the entire industry speechless because sometimes fintech is stranger than fiction. This is the moment that had everyone asking, wait, is this real? Some notable moments that we didn't see coming include T.S. Anil stepping down from Monzo. And on a lighter note, the Channel 4 series Hollyoaks being investigated by Ofcom for promoting the app ClearScore. Whether deliberately or by accident remains to be seen. But yeah, that was an odd one. But the real WTF moment this year was cloud outages caused fintech chaos. This year, major outages at hyperscale cloud providers such as AWS, Azure, Google Cloud, Cloudflare, etc., caused payment delays, app downtime, and interrupted trading, affecting banks, neobanks, digital wallets, and investment platforms. The outages exposed the risks of heavy dependence on single cloud providers, prompting fintechs to adopt multi-cloud strategies, improved failover systems, and stronger disaster recovery planning. Challenger banks and mobile-first platforms saw login failures, app crashes, and delayed notifications, undermining the trust of their users. Even short outages eroded confidence in the reliability of, quote, always-on digital financial services. It's probably easier to ask if you were not affected by the outages. I think everybody was kind of affected in some way. I think even marketing tools like our Eventbrite platform or our CRM was affected. It's like LinkedIn that caused people to go into a tailspin over that. So it was a lot of services that were like fintech adjacent as well as banking themselves. But also just silly ones, people being locked out of smart houses, that are unable to adjust the incline of their smart beds, and then more serious ones like missing bill payments and tax return deadlines. I think there's something to be said for some of these outages always seem to occur on or around either payday or tax deadlines, which was, putting people at risk. But what was your initial take on this?
Yeah, it's an interesting reflection on just how many of our services are cloud. But even more interesting is projecting into the future, particularly the AI discussion. Is we're beginning to outsource so much of our brain over time to compute. When that compute fails, then what happens? And at the moment, we are talking about, I can't remember how long it was, but it wasn't long. And I think there's something in there about how AWS and all of these, other providers reacted incredibly well to getting the infrastructure back up there. So I think that was also a story there as well. But there is this other kind of discussion that I've been picking up on around, bring back the mainframe, which is kind of interesting because a lot of banks have really struggled to get cloud right. So the wider story here is that in some ways, when you have legacy mainframe, cloud is very, very difficult. Particularly when you talk about moving, if you want to become Monzo, for example, we've got to move to a cloud-based, SaaS core, and everything has to be SaaS and whatnot. These things are incredibly difficult. So I think in situations like these, and this will be one of many situations where some banks might be thinking, maybe there's alternative strategies to this. Maybe we can keep some on our mainframe and work with some orchestration services in cloud, or use multiple cloud providers or what have you. But I wouldn't go so far as to say that, oh my God, this means that cloud is terrible. Far from it. I think it ended up in a good place.
And I think we also, on a similar note, spoke to Monzo this year, right, about their Monzo stand-in. So almost having a backup that can kind of seamlessly overlap when things go down. I think, I don't think we're saying that cloud is necessarily bad. I think it's more just that it was telling how many household brands that you use every day were all tied to the running off the same cloud provider. And I think that was the kind of interesting thing about it. Joe, what was your take on that?
Yeah, I think just like everyone else, shocked how fragile the whole system is. It was one story that day, but it could be another provider another day, and how exposed and fragile it all is, and how interconnected it is really quite terrifying, especially when thinking about cyber attacks and hacking, or people even just doing it for fun. Breaking the system was terrifying to see. As you said, it is good to see people like Monzo preempting this kind of stuff with, they've doubled the whole infrastructure. They've got all of their cloud services backed up with another one. I'm not sure if that just shows that they're thinking in the right way. Yeah. And that, I'm sure that goes very far in making people decide that's where they put their deposits. It's just a kind of another tick there.
On that sort of security and safety bit. If your bank kind of goes down twice on 2 consecutive paydays, or when you've got to pay your tax bill or something, your trust is going to be eroded over time, right?
Yeah. But it is terrifying. I think a lot of the things that can go wrong and cause outages are often open source, and actually there's not huge profit incentives behind them as well. So it's just terrifying that a lot of it is built on very thin wires.
Yeah, I think that's probably the actual WTF of it all. It's kind of exactly to your point, the kind of fragility of it.
Yeah.
If one provider goes down, how many other providers does it pull down with it?
Yeah.
And then the reputational erosion is on the front-facing brand, not the infrastructure behind it.
We need to think of these more as utilities. I think we discussed this on the video with Monzo, that the utility providers, for example, have clear redundancy strategies, but do banks? Don't know. The thing that made Monzo's case really interesting is they also have a backup app as well. It's they can fire up this other app that sits on this other infrastructure that has some basic services that can work. I think that's pretty cool. It's expensive though, right? I mean, maybe that's why a lot of other banks are not doing it. I don't know.
Let's see. But not to end on a complete downer. So have you guys got any other WTF moments that you'd like to mention? I mean, obviously that Hollyoaks one was bonkers, but anything else you want to bring to the table to finish on?
I think the rise in the kind of predictive markets, has been very interesting to see. Essentially, bets being brought into real world outcomes, who's gonna score the most goals second half of this game, all in real time, and led by the markets, are now being introduced into popular investment platforms, investment apps like Robinhood. And actually, I think there was an announcement recently that that's going to drive most of their engagement anyway. So I think this could really shape the future, but it's also been a massive feature of this year. Wow,
gambling.
Essentially gambling.
It's essentially gambling in some ways.
And but less regulated. And it's in a way of kind of circumventing the regulation, because it's kind of packaged up as an investment.
Yeah.
Ooh,
it's interesting.
What would you say?
there's a few things. I think we've had so much chat on the podcast about this. Do I list in London? Do I list in New York? Should I just move to Dubai? No, wait, I've moved to Dubai.
It's not what I thought it was.
Yeah, it's not what I thought.
I'm moving back.
Moving back. I think this is a conversation that will just sort of keep going on. I think, as we sit in London, I think it is a little bit depressing in some ways when you see, how amazing the fintech ecosystem is here, and, how so much of fintech does originate from the UK. All of these big businesses going, actually, there really aren't any incentives for us to headquarter here anymore. And I think that has been sad, but also understandable in many ways. Oh, we need to end this on an upper.
This is on a downer.
Bitcoin. We could talk about Bitcoin. So JP Morgan have been very down on Bitcoin forever, and so there was a big U-turn from Jamie Dimon. That was interesting.
A lot of U-turns on crypto in general. Like Klarna, we also mentioned.
Yeah.
Quite a few U-turns from Klarna as well, because they also...
they were very bullish on AI, weren't they?
Very bullish on AI bots.
Did a load of layoffs, and then we're like, actually, we need some humans.
Yes. Exactly.
Actually, none of this works.
Oh, I'd forgotten about that, but that is good as well. And kind of goes to the point you made on the agentic AI of like, sometimes having some humans in there is a good thing. So let's not write off all the humans immediately. That's maybe a lesson from 2025. Right, so that is all we have time for today, but what an incredible year it's been. Be sure to check out our social media, where we'll be sharing even more highlights that we couldn't fit into today's session. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thank you so much to today's guest. Where can people find out a little bit more about you, David?
On LinkedIn @DavidBG.
Very nice. Joe?
You can Google 11FS Pulse or follow the link in the description.
Lovely. As for me, you can find me again, 11fs.com, Laura Watkins on LinkedIn, or of course on this podcast. And thank you so much for tuning in to today's Fintech Insider. Thank you for all your support throughout the year. And I'd like to take this opportunity to wish you all a very happy Christmas. We have one more news show left for you on Monday, but this is our last Insight show of 2025. So thank you so much for listening. We will be back with more insights in January, starting as always with our prediction show. If you enjoyed today's episode, be sure to follow us on your favorite podcast platform. Thanks again for listening. Goodbye and Merry Christmas.
Been out here all morning. Not a single bite. Guess the fish finally figured it out. Just like hackers do when Cisco Duo's on guard. With Duo's end-to-end phishing resistance, every login, every device, every user stays protected. No hooks, no catches, no bites. Cisco Duo. Phishing season is over. Learn more at duo.com.
So you want to start a business. You might think you need a team of people and fancy tech skills, but you don't. You just need GoDaddy Aero. I'm Walton Goggins, and as an actor, I'm an expert in looking like I know what I'm doing. GoDaddy Aero uses AI to create everything you need to grow a business. It'll make you a unique logo. It'll create a custom website. It'll write social posts for you and even set you up with a social media calendar. Get started at GoDaddy.com/Aero. That's GoDaddy.com/AIRO.
This episode is brought to you by Marqeta. When it comes to your payments provider, you can't afford to compromise. Marqeta's modern payment solutions flex with your business without the trade-offs. Stable and agile, secure and innovative, scalable and configurable. If they say you can't have it all, don't believe them. Your business demands more. Choose a payments provider that delivers more. Choose Marqeta. Visit Marqeta.com/Spotify to learn more.